It's your boy Nature, aka Nature. Thanks for subscribing to the OnlyFans. So, alright, let's get to it. Alright, so the difference between a Dragonfly Doji and a Gravestone Doji. Alright, so there's like four type of doji. Dojis are lengths of upper and lower shadows that can vary and resulting in 4x candlesticks that look like crosses and T's and plus signs and stuff like that. And the word doji is referred to both the singular and plural form. When you see a doji form on your chart, pay special attention to the preceding candlesticks. A doji forms after a series of candlesticks. It can form on a downtrend, on the uptrend. But you have to see some type of candlestick, to see after the because doji candlesticks, doji candlesticks, doji signals, doji doji signals are just lower upper shadows. They look like T's. And they signal that buyers are becoming exhausted and weakening, and that reversal is coming, and it's going down, or sellers are becoming on a downtrend. Sellers are becoming exhausted and weakening, and a reversal is coming on an uptrend. You know what I'm saying? So that's all dojis really are just they're not. We want to talk about single candlestick patterns next, but we want dojis are just reversals. Signals that form on a trend, to let us know when a reversal is coming. So different between a Dragonfly Doji and a Gravestone Doji. A Gravestone Doji occurs when the low, opening, and close prices are the same, and the candle has a long upper shadow. So the Dragonfly Doji, the candlestick has a long lower shadow, and it closes at the top. It closes at the opening. The difference between a Gravestone Doji is it has a long upper shadow. A Gravestone has a long upper shadow, and instead of closing it at the opening, it closes at the price. It closes at the price closes at the close at the bottom. So the T it's a reversal T. It's a reversal T. So the Gravestone candlestick, it looks the same as the Dragonfly Doji. Only thing is it has a long upper shadow, and the Gravestone Doji looks like an upside down T. So it's just an upside down T from the Dragonfly Doji. The Dragonfly Doji is a T. It forms a T, and the Gravestone Doji is a inverted T, or a reverse. It's an upside down T. So this implicates for the gravestones that are the same as the Dragonfly, but both indicate possible trend reversals, but must be confirmed by the candles that's following. We need some type of confirmation along green marble candlestick, or a long red marble candlestick to confirm the reversal or not. So let's just talk about Gravestone Doji. We got one more doji. We want to talk about four price dojis. You do see these dojis forming a trend. Like I said, I've been studying the market for about almost a year now. So yeah, and I see these all the time form and a reversal form right after that. So sometimes it doesn't, but let's just dive into Gravestone Doji definition. All right, so what's a Gravestone Doji? Doji is a bearish reversal candlestick pattern that is formed when a opening, low, and closing price are near each other with a long upper shadow. The long upper shadow suggests that a bullish advance in the beginning of the session was overcome by a bear at the end of the session. So in the beginning, buyers were in it. It was bullish. That's what the bullish. That's why it's going up. The Gravestone candlestick is going up. Is a long the wick is a long wick going up, because it suggested that buyers were in the trade earlier, and that's what that long candlestick going up, that long upper shadow suggests. That the buyers, which means bullish, advance in the beginning of the session. But like I said, the pattern forms when it open and close, but it closes at the price at the at the close. Price closes at the bottom, at the end. So which means that the beginning of the session was overcome. It was overcome by a bearish. It started off bullish, but it was overcome by a bearish, which created that inverted T, that downside T. By the end of the session, what often comes just before a long-term bearish downtrend. So you see this right after you see a long-term bearish downtrend. So you see a Gravestone Doji, uh, um, it can form that a long-term uh, bearish downtrend. A long-term selling pressure is going down on a downtrend. That's when if you see that, or you see a Dragonfly Doji, it's just that a long-term bullish upside or uptrend is coming. So a key takeaway for Gravestone Doji is it's a bearish pattern, and so it's a selling pattern that suggests that a reversal is following by a downtrend and the price action. The reversal is followed by a downtrend and price action, or it could be on an uptrend. A Gravestone pattern can be used as a signal to take profit on a bullish position or entering a bearish trade. So like these are just dojis. The dojis just they're this Gravestone and the Dragonfly Doji are literally like the same. Like they're the opposite of a Gravestone Doji is a Dragonfly Doji. What does a Gravestone Doji tell you? A Gravestone Doji pattern implies that a bearish reversal is coming, while the opening, low, and closing price don't have to be equal for the pattern to be valid. There shall be a relative small tail, else the pattern could be classified as an inverted hammer or shooting star or spinning top. And we're going to be talking about inverted hammer, shooting star, and spinning top. These are all inverted hammer, shooting star, and spinning top are all reversal patterns that that form during the uptrend that show that price is coming in a reversal, is coming in a long-term reversal pattern going back down. Okay, usually but hammers and shooting stars are not dojis. These are considered single candlestick patterns. So we're going to talk about that next. But the market narrative is that the bulls attempt the buyers attempt to push to new heights over the session, but it closed at the bottom. So that means that the bears, the sellers, were able to push price action uh, back from the opening to close the session at the bottom. So the long upper shadow represents that the bulls were in momentum, but the T at the bottom represents that the bulls lost momentum, and that the bears, that the sellers gain control, and that reversal is likely, and that a bearish or a selling reversal is likely. So this is what a Gravestone really is. While the Gravestone Doji can form at the end of a downtrend, it's more common to form at the end of an uptrend. Like I said, you're going to see more on an uptrend. You're going to see a Gravestone Doji more on an uptrend, and you're going to see a Dragonfly Doji more on a downtrend. So when you see a Gravestone Doji form at the end of an uptrend, it's almost a clear signal that reversal is coming if it forms on an uptrend. Although the Gravestone Doji is popular, it's very popular. It suffers from the same reliability issues as many virtual pattern. We need some type of confirmation. We need some more confirmation to even get in that trade. So generally, traders will not act on a Gravestone Doji unless the next candle provides confirmation of a reversal. So we need some type of all right. So you see a Gravestone Doji form at the uptrend. You need some type of confirmation of a reversal. So you need more information. You need more candlestick patterns to form. You just don't get in right after you see a Gravestone Doji form on an uptrend and say, "Oh, it's going down. It's going. This is the end of an uptrend. This is the beginning of a downtrend." No, we need some type of confirmation. Some more confirmation. We need a big, long Marabozal candlestick, or some type of bearish Marabozal candlestick, that confirms that it's going in that direction. So trading the grave that is going down that direction. So the Gravestone Doji, traders will often exit on a long position or indicate a short position. They'll often exit after a long position once they see that Gravestone Doji form. They'll get out of it because you want to get out of it because you'll be losing money. You know what I'm saying? So you want to get out of that. Take your trades very serious. Like I said, I'm gonna give you a lot of psychology about trading, and helping y'all make trades and help to make the best trades that you need to make. So I got y'all with that too. So when you see a Gravestone Doji, most traders often exit out of that long position, that whatever trade they were in, and or they can. It depends on how much money you got in your account. You can write it out, but or indicates a short position. It indicates a short position after identifying a Gravestone Doji pattern. Although it's important to use this candlestick pattern in conjunction with other forms of technical analysis as a confirmation. Oftentimes traders will also look at the volume associated with the session, see how is the session, see you got to identify the trend. You got to identify the trend, see what direction it's going in, if it's going in an uptrend, if it's a downtrend, if it's consolidation right now. So it's a lot of things that we need. We look at technical analysts, and we have to first thing you have to do is identify the trend. See what direction is going in. So oftentimes trader will also look at the volume associated with the session, see which way it's going, as well as the previous session activities as potential indicators of reliability of a pattern. We need some type of pattern. Price will reforms. If it did it in the past, it's going to do it in the future. So we just go back and look at price in the past and see what price does in the past to see what price wants to do in the future. So the following charts, the Gravestone Doji, just what a Gravestone Doji looks like, following a significant high value uptrend, which could indicate that a bearish reversal, is coming. We see it on a high value uptrend, a bearish reversal, which means a selling reversal is coming, and over the long term, over that that high value uptrend. So following the breakout. So we're going to talk about breakouts too and pullbacks. I got all that. All right. So we actually talk about it a little bit a little bit. We're going to go more and more into it. You know what I'm saying? I got y'all as much information as I can. So let's see on this chart right here. I don't really like this. I don't really like this how they did this one. It just looks like crazy. Like, okay, you can see right here. So you can see the Gravestone Doji form. It's a long upper shadow, and and it closes at you see it going uptrend. It's an uptrend right here, right? Then you see the long upper shadow. It's a long upper shadow. You can't miss it, and it has a minus. It has a T. It makes a upside down T. You see that upside down T on an uptrend. It clears that reversal is coming, right? On an uptrend, you're most likely going to see a Gravestone Doji on an uptrend, and you're most likely going to see a Dragonfly Doji on a downtrend. So you see a Gravestone Doji form on an uptrend, it means that reversal is coming on the downside, on a downtrend. All right, but we have to see some type of confirmation. We do. We see a red Murabozu candlestick confirmation plus a hammer or a shooting star. It looks like a shooting star candlestick form, or inverted hammer forms on top of a Murabozu. An inverted hammer forms. Inverted hammer means that price inverted hammer is a single candlestick pattern that it signifies that price wants to reverse and go down. It's called inverted hammer because it's poking up at the top. Inverted hammer and a shooting star also look identical, and the only difference is whether it's on an uptrend or downtrend. It's on an uptrend, you see a bullish inverted hammer, and we're gonna talk more about that. Is most likely another confirmation, just like the Gravestone Doji, that it's a reversal and a down from an uptrend to a downtrend is coming. So we see that what happened. We see the long, we see that the long buyers were in that. And then, it closed near the bottom and made that inverted T. And then we see a red, long, Murabozu candlestick form. Boom. Then it pushes price back down. Okay, continuation. So that uptrend, that Gravestone we see a Gravestone Doji confirms that uptrend is done. Most likely, we had to see a confirmation. We got the confirmation from a red, long candlestick. Boom. Going back down to a downtrend. Boom. Getting in for a sell. Ride that out from a sell from 5.0 to what? 4.0. All right, so we trade, and it actually did go all the way down to 4.0 because we trade in key levels. We trade from 5.0 to 4.0 or 4.4. You know what I'm saying? So I'm gonna show y'all how, that's how we trade in key levels. You know what I'm saying? But look, it did go right to 4.0. Then it went back up to 5.0. So price will do that. It'll go from one key level to the next key level. All right, and I'm explaining that more and more and more. Actually in the charts, the actual MetaTrader charts. I'm going to be explaining, where price is going to be going at, and where also looking at, where price went at in the past. We'll be able to tell. I'll be able to show you where price went at before. Shout out to Swag Academy. You know what I'm saying? Cause he put me on hella game. You know what I'm saying? That's my boy. You know what I mean? Swaggy C. You know what I'm saying? So yeah. We trade in key levels. Like I said, I bought a course for $300 from Swag Academy. All right, and I also read the whole thing of babypips.com. They got babypips.com. Also is it's a free website that tells y'all everything that I'm basically telling you. I read that whole thing. I bought a course for $300, and I've been trading for about a year. So I'm very how everything goes. So, like, you know what I mean? Y'all got me. I got y'all. You know what I mean? It's like, let's do this. All right. I want to see everybody win. You know what I mean? Everybody make money. So in this market, you know what I'm saying? It's not that hard to make money in this market. So, that's why I'm doing this for y'all. So this is a Gravestone Doji. Like I said, Doji's dead form. We've seen a hammer / shooting star form after that inverted after that Gravestone Doji. We did. So a gravestone is a reversal that forms at the top of an uptrend. Okay. In this example, the Gravestone Doji predict further breakdown from current levels to close gap near from 50-200 a day moving average 4.6 to 4.80 respectfully. These is trading stocks and stuff. I don't trade stocks. I trade currencies, trade stocks. Really like that. The spreads are too high for me in Bitcoin and stuff like that. But you can make a lot of money. I actually made about off my demo 30,000 in 10 minutes. Off of Bitcoin. So we're gonna you know what I'm saying, later on, Bitcoin moves very, very fast. Off of is like the price just off of 3 cents, it moves way faster than as far as the currency pairs are. It's very, very fast. But the spreads are very, very very, very big. You want small, tight spreads. I'm gonna tell you about spreads and why spreads are so important. Spreads are very, very important. All right, cause your spread is where you enter. A spread is where okay, the ask price and the bid price. So the spread will be the ask price will be where you want to enter at, but the bid price is at the top. The bid, but that's where you think that's where you're expecting price to go there, but price hasn't got there yet. The bid price cannot even, sometimes your ask price don't even, you ask for this price and you get in at this price, but the spread could be so big that you asked for this price and you got in at this price, but the spread was so goddamn big that it never met the price that you asked for. Sometimes it never meets the price that you asked for, and before it meets the price that you asked for, the bid takes you out. It takes you out of the trade. That's how the commissions get their money, through spreads. Every time you enter a trade, the commission takes money out, and every time consider of the spread, they get a lot of money off of spreads because people don't understand spreads like that really, and they make a lot of commissions off of spreads too, the brokers and stuff. That's how they make their money off of us losing. Cause we got in on a big spread, so you want to make sure you find a broker that got, good spreads. Hugo Way has good spreads. Their spreads are not bad. They have some tight spreads. So, I use Hugo Way. In my first video, I show you about Hugo Way and why I use Hugo Way. Moving average. We're also gonna talk about moving average because I do use the moving average. A moving average is an indicator, a technical indicator that I also use. I use the moving average really, and that's about it. Sometimes I use Fibonacci. You know what I'm saying? But the moving average, I'm gonna explain y'all how the moving average works and why the moving average is so important too. So that's the difference between a Gravestone Doji and a Dragonfly Doji. The opposite pattern of a Gravestone Doji is a bullish Dragonfly Doji. All right, it's a bullish Dragonfly Doji, and Dragonfly Doji is a bearish Gravestone Doji. A Dragonfly Doji looks like a T and it forms when a high opens and the close of a session are all at the same at the top, and a Gravestone Doji is an inverted T. So you know, although these two formations are talked about separately into when confirmed, one can be called a bullish and the other could be called bearish, but sometimes they can appear in opposite scenarios. For example, a Gravestone Doji can be followed by an uptrend, or a bullish Dragonfly may appear. You know, so yeah, you'll see a Gravestone Doji form at an uptrend, and you'll see a Dragonfly Doji form on a downtrend. So both patterns signify that that reversal is coming. When you see a Gravestone Doji form at an uptrend, it's going down. You see a Dragonfly Doji form on a downtrend, it's most likely the pattern is going back up. We need some type of confirmation, more candlesticks, so we wait. We get that confirmation, we get in. It's perhaps more useful to think of both of these patterns as visual representatives of uncertainty rather than pure bearish or bullish signals. So it's just it's a potential that a reversal could happen. Doesn't mean that a reversal could happen or a bearish or bullish reversal could happen. We need some more type of confirmation. The limitations of a Gravestone Doji. Gravestone Doji can be used to suggest that, you know, a stop loss placement and eyeball profit taking in plan on a downtrend. Precise methods than other technical indicators provided, like the moving average. When we talk about the moving average, although very reliable, increase with volume and confirmation candles. The Gravestone Doji is the best, accompanied by other technical tools to guide traders. So, all right, so this is Gravestone Doji, gang. All right, Dragonfly Doji, long-legged Doji. All right, gang. So, in the next video, I think we're gonna do 4-price Doji because that's another Doji like that you might see pop up too. So I want to go into that too. So I'm gonna talk about that one too. All right, so these are the Dojis that that they're gonna form up on your chart. It's a long-legged price Doji. Next, we're going to talk about candlestick patterns, okay, and single candlestick patterns and stuff like that. All right, so these are dojis. All right, so gang, it's your boy Nature, aka Nature, gang.